Okay, so let's continue. In our last class, we discussed IS2, which is inventory, and we did justice to the standard. We have seen what an inventory is. We have seen the measurement principle of inventory. We have seen the recognition criteria of inventory. So, do we have any question from inventory IS2 as a standard? If there's any question, please can you raise up your hand and talk? Okay, so if there's no question, let's continue, please. Okay, so today we'll be looking at IS 23. We'll be looking at IS 23 today, which is borrowing cost, right? We'll be looking at IS 23 borrowing cost. So borrowing cost is the cost of getting loans from the lending institution, like the bank or any other lending house. So the cost, that is the interest rate on it, that is what we are looking at today. We are looking at borrowing cost. Now, we know that interest payment or finance cost, as the name may be, is an expense. So if you pick a financial statement, you will see a finance cost under expense in the statement of profit or loss. But what this standard is saying is not every interest that you should expense. There are some interest that you should capitalize, meaning you should add it to the cost of the asset. So let's say you borrowed money to construct or to buy an asset. IS 23 is saying you should not capitalize, you should not expense that interest. You should add it to the cost of the asset, meaning you should capitalize it. But there are certain criteria that it must meet before you can capitalize it. Because if these criteria are not set, we say management will be using it to window dress their account or engage in a creative accounting with it. So the standard setter gave some criteria that it must meet before it can be capitalized as a part of the cost of the asset, right? So, like I said, borrowing costs are the interest rate, sorry, the interest and other costs that an entity incurs in connection with borrowing of funds. So, this fund, if it is used to construct or buy a qualifying asset, it is to be capitalized, right? It is to be capitalized. So what is this qualifying asset? A qualifying asset is an asset that takes a substantial period of time to get ready for its intended use or sales. It is it is not an asset that you can just construct in a short period. Take for instance, starting a building. You know it takes substantial amount of time to get ready. Constructing bridges or roads, they take substantial amount of time. So if you borrow to construct a building, IS 23 is saying you should recognize the borrowing cost as part of the cost of the building. So any interest you pay on the fund that you borrowed to construct that, you should capitalize that interest, meaning you should add it to the cost of the asset, right? But mind you, it must be for a qualifying asset. A qualifying asset. So any of these can be classified or can be seen as a qualifying asset depending on some circumstances, right? We have inventory, we have items of PPE, then intangible assets that take substantial amount of time to get ready for its intended use. That is, if you want to use it, or for sale, if you want to build and sell, right? Then the following items are not qualifying assets. Number one, inventory that are manufactured or otherwise produced over a short period of time is not a qualifying asset. Is not a qualifying asset. Then assets that are ready for their intended use or say when acquired is also not a qualifying asset, right? When I was explaining or when I was defining a qualifying asset, I said a building that you are constructing, not that a building you went to the market to buy. That is not a qualifying asset. But if it is something you are constructing that will take a substantial amount of time, the reason is this: interest that you pay on these assets that will take enough time to get ready should not be charged directly on your profit, because the interest you will pay over a period of time, if you charge everything to your profit, or if you charge everything against your profit for a particular accounting season or for a particular accounting year, you see that it will disturb, or it will be heavy on your bottom line, which is your profit. So this standard gives allowance to businesses or to companies to capitalize this cost, this borrowing cost, right? So any question on that?
Annual rental amount. Property year than because we shop now here. Rental value of the property. Annual rental amount. Okay,
Sorry, I am having a network issue here.
so then date of payment
So can you hear me?
because under guarantor
Please confirm if you can hear me. All right. So any questions so far? Any questions so far before we continue?
Okay. So like put that
All right. So since there's no question, let's continue. Now, borrowing costs that are eligible for capitalization. Like I said earlier, there are those costs are incurred on the acquisition of, or there are those costs incurred in obtaining loan or borrowing funds for the acquisition or construction of a qualifying asset, right? So we have defined what a qualifying asset is. We have seen what a qualifying asset is. Now we may have a situation where we borrow specifically for the acquisition of or the construction of the qualifying asset. We may have a situation where we have a general borrowing. So if you have a specific borrowing, that one is traceable to the qualifying asset and is very easy to deal with, right? But what if you have a general fund that you use to obtain a qualifying asset? You borrow the money generally for other things, right? But you use part of it, or you use the whole thing. No, you use part of it to obtain or to construct a qualifying asset. How do you account for that? That is the next thing we are looking at. So when general borrowings are used, the amount of borrowing cost eligible for capitalization is obtained by applying a capitalization rate to the expenditures on the asset, right? The capitalization rate is the weighted average of the borrowing cost applicable to the borrowings that are outstanding during the period, except for borrowings made specifically for the purpose of obtaining a qualifying asset. The amount of borrowing cost capitalized cannot exceed the amount of borrowing cost it incurred during a period. Please, can you hear me? Hello, are we still in the class? Okay. I don't know why network choose to disturb us by this time. I just don't know why. It is well. So, like I said, if you have a general borrowing, IS 23 is saying you should apply a capitalization rate. And what is this capitalization rate? A capitalization rate is the weighted average, right, of all the borrowing cost, of all the funds borrowed. So how do we calculate this capitalization rate, right? Please give me like 5 minutes. Let me try and sort out this network issue. I'll be right back, please. All right. So can you hear me now?
Yes, sir. Okay, yeah.
All right. Okay.
Mm,
So I will share my screen now so that I can demonstrate this borrowing cost, the capitalization rate, how to calculate the capitalization rate, right? So I'll be using Excel to calculate that. Let me open my Excel before I. Please confirm you can see my screen. Can you see my Excel screen? My Excel blank sheet. Hello, somebody should confirm, please.
yeah, we can see your
Screen.
All right, all right. So we are trying to calculate capitalization rate. So let's take, for instance, we have some borrowings. That's general borrowing. Let's say we have one loan note of 12 million. The interest on it is, let's say, 120,000. Then we have bank overdraft of 8 million. Right, the interest on that is, let's say 70,000. Right, now out of this we use this fund to get a qualifying asset, right? How do we calculate the capitalization rate? Mind you, this fund were not borrowed specifically for this, but these were used for the qualifying asset, right? How do we calculate the capitalization rate? Now, how to calculate the capitalization rate? Like I said, you have to sum up this. So this and this, you sum up the two. Our capitalization rate, sorry, let me use CR for capitalization rate, is equal to this divided by this, right? You can multiply this by 100 to get your percentage. So let's say this is equals to this multiplied by 100. So our capitalization rate here is 0.9%, right? This capitalization rate is what you will apply on the interest rate, on this interest, to get how much you should capitalize, right? Are we following?
Yes, we are following.
All right. Okay. So that is how to get our capitalization rate. So I will stop sharing my screen now and go back. If there's need for this thing, I will still come back to it. Any questions so far? Hello, any questions so far? Okay, so if there is no question, we
For
go
now,
to...
my side, no, sir.
Okay, all right. So we go to period of capitalization, then period of suspension of capitalization, then period of cessation of capitalization, right? IAS 23 specifically is not a large standard, right, that will give a student headache. IAS 23 is very short and straight to the point. The only technicality about it is this general borrowing, which we have tried to do justice to in respect to the capitalization rate, right? So since there is no question, let's go to period of capitalization, period of suspension of capitalization, then period of cessation of capitalization. When do you start capitalizing, right? That's the first thing we are looking at. When do you cease? Okay, so when do you start capitalizing? When do you cease? When do you suspend it? And when do you cease it entirely? That is what we are looking at now. Okay, so the period of capitalization is capitalization of borrowing costs should start only when, right? This is a standard, right? It's a standard. So I will read from the standard and explain if needs be, because this is a standard. I cannot give my definition, right? So it should only start when expenditures for the asset are being incurred. That is, you cannot start capitalization of borrowing cost when maybe you just borrow the money and you have not started the construction. You have not started incurring any cost on the asset, so you cannot start capitalization at that time. So capitalization should start only when expenses or expenditure on the asset is being incurred. Right? Is that clear? Or do we need further explanation on that? All right. So it is also not not only when you are incurring cost on the Mr. Ido Ibrahim, you say you did not hear anything I explained. Is it from the beginning of the class or when, so that I know how to
explaining up until when you closed your screen. But what you just started explaining regarding borrowing costs now, I did not seem to understand. I did not seem to hear that rather.
All right. So, but can you hear me now? Let me take it. Let me take it again. Mr. Ibrahim, can you hear me now?
Yes.
All right. So let's continue. Let me take it again. So after I close my screen, I said we are looking at the period of capitalization. That is when to start capitalization of the borrowing cost. We talked about the suspension. We also talked about the cessation. Right?
Yes.
All right. So I said when to start capitalization. Please give me some minutes. I'm coming back. All right. So I said when to start capitalization. We have three criteria to be met. So we have three criteria to be met. Number one, before you start capitalization, you must have started incurring a cost on the qualifying asset. Right? That's number one criteria for you to start capitalization. Number two, these three must be met. So number two is you must have incurred a cost on borrowing. That is, you must have obtained a loan, because you cannot capitalize borrowing costs if you are using your fund, your personal fund or your business fund. The network is really frustrating me. So, like I said, it is when borrowing costs are being incurred. That's number two. When you have incurred, or when you have obtained the loan and you started paying or incurring interest on the loan. That's the second criteria. Then the third criteria, activities necessary to prepare the asset must have started. So if you are constructing a building, the construction work must have started, right? After you must have started incurring expenses on the building. You must have obtained a loan, and the loan must have started accruing interest. Then lastly, the construction work must have started, right? That is the three criteria to be met before you can start capitalizing borrowing cost. If not, you expense any cost you incur. Now, the after this we have a suspension. All right, so we have a suspension of capitalization, right? There is a time you will suspend capitalizing the borrowing cost. Not that you will seize it completely, but you will suspend it. You suspend it for a period of time, then you come back to it again. Now, when do you suspend a capitalization, or when do you suspend capitalizing your borrowing cost? Capitalization of borrowing cost should be suspended if development of the asset is suspended for an extended period of time, right? Now, take for instance, if you are building, if the construction work is suspended for a longer period of time, you should suspend a capitalization. Now, this does not mean take for instance, if you are building a house, then after casting of some deckings, you wait for it to get dry before you continue. This is not what this suspension is talking about, right? This suspension is not talking about you waiting for one phase to get ready before you start the other phase. No, that is not what suspension is talking about. Suspension is talking about maybe when you have suspended the building completely. Let's say you have suspended it for 1 year. This period of 1 year, the borrowing cost should be suspended. You cannot capitalize any borrowing cost you incur within this period. Is that clear? Any question on this suspension of borrowing cost capitalization? Any question?
On my side, no, sir.
All right. Anybody with any question so far? All right, so if there is no question, we go to cessation. When do you cease, or when do you stop completely capitalization? So capitalization of borrowing cost should cease when the asset is substantially complete. When you have completed the construction and when it is ready for its intended use or for sale, you have to cease completely. This time around, it's not suspension. You have to cease completely, right? So the costs that have already been capitalized remain as a part of the asset cost, but no additional borrowing cost may be capitalized. Right? What this means, what this point is talking about is when you have completed the asset, the cost that you have capitalized so far will remain as cost of the asset, right? So when you are costing your asset, when you are determining the cost of the asset, this borrowing cost that you have capitalized so far will be added to it. Let's take for instance the cost of the asset, or the money you spent in constructing the asset is 20 million, right? But the borrowing cost that you incurred and you have capitalized within this period of construction is 5 million. What this standard is saying is the cost of the asset should be taken as 25 million. That is the initial cost, the initial amount spent on the construction, and also the 5 million borrowing cost that has been capitalized, right? So that is what IAS 23 is talking about. Now, how do we apply this IAS 23? So how do we apply this IAS 23 in preparation of financial statements? Like I explained earlier, you know, when you are preparing your financial statement, interest cost normally should be charged to your profit or loss account, right? Which will in turn reduce your profit. But because of IAS 23 that says you should capitalize it, that you should capitalize your borrowing cost, it will increase your profit, because you will not charge that to your profit again, right? You only charge it to the cost of the asset, which will be reduced by depreciation. So it is only depreciation you will charge to your profit or loss, right? So that is the relationship borrowing cost our IAS 23 has with our financial statement. Like I said, and I keep saying, all we are doing here in this financial reporting class is training us on how to prepare financial statement, right? So the other time you can seize borrowing cost capitalization is when you have abandoned the project completely. When you have abandoned it completely, you are not going back to it again. You have to stop capitalization as well. You have to cease capitalization. So that is the end of IAS 23. Any question? Any question?
Hello, sir.
Okay. Yes, I can hear you.
Okay. Sorry, sir. The question I want to ask is this: on the cessation. So does that mean, since though we stopped the capitalization, but since the money has not been paid back, so is it that they will not charge interest on it again, or the interest will just be now be charged to P&L?
Okay, now yes, simple. The interest will be charged to P and your profit or loss. Simple, because any interest you incurred after you have completed the asset, the construction of the asset, any other cost, any other borrowing cost you incur should be charged or should be expensed, should be charged to your profit or loss, right? So what this means is borrowing cost capitalization is within the period which the construction takes. That is why it is not all borrowing costs that you capitalize. It is borrowing cost that is used, borrowing that is used for the construction of a qualifying asset, not just anyhow asset. And that is why you cannot use you cannot capitalize borrowing cost on the borrowing you use to buy an already made asset, because buying an already made asset will not take a substantial amount of time to get ready, right? So your borrowing cost capitalization is within the period of the construction of the asset. If the asset takes 5 years of construction, and maybe the loan you are paying, the loan you obtain is for a period of 10 years, you only capitalize for 5 years. So the remaining 5 years, every interest you pay yearly should be expensed yearly. Is that clear?
Yes, sir. Clear, sir.
All right. All right, thank you. So any other question before we call it a night? All right. So on Sunday we will have a class. The class we were supposed to have on Tuesday that we couldn't hold, we will have it on Sunday. And it's not that we are fixing a class on Sunday, no. We just want to make up the lost time. Is that okay by us?
It's okay.
All right. So if there's no other question, we call it a night. Good night. See you on Saturday for tax class,
Good night, sir.
then on
Thank you.
Sunday for FR.
Good night, sir. Thank you, sir.
Thank you.